this video, we will try to understand public finance at a glance. A complete bird's eye view of public finance. Well, public finance is categorized into 5 areas: public expenditure, public revenue, public debt, fiscal policy, and public administration. In public expenditure, basically it's a government's expenditure done on various projects. There are basically 4 type of expenditures government do, namely revenue expenditure, capital expenditure, development expenditure, and non-development expenditure. Revenue expenditures are short-term expenditures like paying off the loans or paying off the interest on the loans borrowed or giving subsidies. All these comes under revenue expenditures. Capital expenditures are relatively long-term in nature and one-time style, like expenditure done on huge projects, loan given to public companies or corporations. Similarly, development expenditures are, as the name suggests, focused towards development of the economy. So expenditure which targeted directly in building of roads, dams, bridges, infrastructural facilities are basically development expenditure which directly leads to economic development and overall helps us improve employment. There are non-development expenditure. These expenditures incurred but they does not lead to direct development of the nation, like expenditures on war, administration expenses, and so on and so forth. Once government do lot of expenditures in the form of public expenditure, in order to do all these expenditures, government has to collect money. The collection of money is studied under public revenue. So what is public revenue is collection of funds from the economy or from the people by various ways or various sources is basically public revenue. So government collects money from people or from various sources is public revenue. In simple word, income of governments is public revenue. Public revenue can be further categorized as tax and non-tax revenues. In tax revenues, there are 2 types. One, direct tax, where the tax is collected directly from the person on which the tax is brought, and there is another indirect tax where tax is collected at a different level. Direct taxes are in the form of income tax or property tax, wealth tax. Indirect tax example is GST. Government also collects money through non-tax revenue sources like fees, education fee, registration fee, by which government also collects some revenue. Another way of collecting non-tax revenue source is prices of public goods and services. Now a lot of goods and services are provided by governments only at a price just to avoid the exploitation of people, just like railway services, transport services, postal services, right? So all these services are not free to people, they are charged at a price. So prices collection for utilization of public goods and services are basically one of the way of revenue to the government. Special assessment charges are the special facilities given to citizens of specific areas. Special assessment is basically the collection of charges or special tax are levied to citizens of specific area because the specific facility is provided for those citizens in the form of water supply, energy, roads, and so on and so forth. So extra charges are applied citizens of those people in the form of special assessments. Fines and penalties are collected from people in order to deter them from not avoiding the law. Examples, fines for rash driving or penalties for late payment of income tax. Government gets substantial amount of money through gifts, grants, and donations. Lot of citizens inside and outside the country gives lot of gifts and grants and donation to the country or to the government. Also, lot of foreign governments or institution provides lot of grants to government for which you don't have to pay them back. So this way government also receives substantial amount of money. But understand, this type of income is not certain in nature. Special levies on products just to deter them from consuming because they affect the health and well-being of human beings. The products like wine, opium, drugs, tobacco, and other intoxicants. Their special levy, special charges are applied not to earn revenue but to deter the human beings from consuming them. This is also one of the way of income to the government. Borrowing is yet another way where government borrows funds from its own citizens, national banks, that is from inside the country, or from foreign governments or foreign institutions like IMF, World Bank. Once we understand how government spends its money through public expenditure and how it receives its money through public revenue, now we also should know a very important part of public finance, that is public debt. Public debt can be categorized into two types: internal debt and external debt. As the name suggests, in internal debt, the borrowings or funds are raised within the country through its own citizens, through national banks, or through giving bonds to the citizens. External debt is raised from foreign governments, foreign institutions like IMF, World Bank. Fiscal policy basically uses and ensures all the three first aspects. Fiscal policy makes use of public expenditure, public revenue, and public debt and ensures that economic development is on track. With fiscal policies, financial plannings are created considering public expenditure, public revenue, and public debt. And financial administration ensures that how the receipts and expenditures are regulated by way of budgets.